in what we call the alternative space, which encompasses BDCs, private placements, real estate, and it's an ever expanding a world, as we all know, and we're very excited to be part of that trend. For those of you that are in Florida, as we are, we're in Longwood, Florida. We're all actually working from home today. So those that are in Florida and the Southeast, we hope that you and your families are safe as we're dealing with Nicole, tropical storm. So fortunately, we're in a tech world, so we're able to do this all remotely. But again, prayers to you and your families, and hope everybody is safe. Thank you for those that are participating today. We're excited about what we're doing, and Sean O'Toole from 17 to 76 will be kicking off our webinar series that will go over November and December. And the focus and the theme of this is transforming the alternative investment ecosystem through technology. During these webinars, our speakers will go into detail illustrating how to streamline and automate your business for alternative investing, leveraging technology. We're seeing it as time goes on. Fintech continues to become more and more essential to the financial services industry, and technology is transforming the alternative investment universe for financial advisors, broker-dealers, RIAs, sponsors, and investors. We wanted to give you an opportunity to hear from emerging leaders in the fintech world to better understand how they are impacting the alternative asset space. We hope it's valuable to you and your teams and you personally. A little bit of housekeeping. I'll have to read this as a disclaimer. We all have to stay compliant. So NewView does not provide tax, legal, or investment advice, nor do we sell investments. We custody IRAs, ESAs, HSAs, and 401ks that hold alternative investments chosen by the client. Now, also to give you some instructions, if you have questions throughout the presentation or toward the end, and we're going to highlight this right now. So you have two options. If you have questions, you have the registered landing page. So below the live stream video, there is a form which you can submit your questions as the presentation is ongoing. Option 2, through social media channels, you can comment in the chat to submit a question throughout the presentation. Please feel free to submit them at any time, and we appreciate your participation. Also, to let you know, this will be recorded, so you'll be able to access this through our social media channels, and ultimately you'll be able to access through our educational portal on our website. So this webinar will keep giving, and that's along with our 4 other speakers throughout November and December as well, so you can access them at a later date if you'd like to. Now I'd like to introduce our first speaker. As I mentioned, Sean O'Toole. He was a good friend of our company's, and we see him on the conference road all the way out there, and he's been really a good advocate for us. We're a good advocate for him and his team, but we've always just been really impressed with what Sean, it continues to evolve. And to give you an idea of what they do, it's a software platform for capitalists, investors, advisors, and entrepreneurs to collaborate in the investment space and create wealth. And a little background on personally for Sean, 30 years in order. He was an engineer, a soldier, financial advisor, venture capitalist, private equity sponsor, RIA, fintech entrepreneur, and that's where he is today. So he comes with a wealth of experience and tenure. Outlook on life is hope is not a strategy and failure is not an option. Paradoxes. I thought this was pretty cool. I believe in God and Ayn Rand. I had to ask who Ayn Rand is. Now I know. I feel very educated and inspired. And I admire both Teddy Roosevelt and Franklin Roosevelt. Thank you for being our guest. Thank you for being part of this. And I'll leave it now to Sean.
Awesome. Well, thank you very much, Heath. Thanks for all your team at NewView for getting this set up. Hopefully y'all can hear me well and see me here at the home office today, just so it'll be a little bit quieter for our guests and the things we're looking at. I appreciate the opportunity to work with NewView and have our clientele work with NewView as well. As you know, being able to invest in alternative investments is not easy, especially in the IRA accounts where many people have the majority of their wealth. So all across the platform, it's been a pretty delightful way in interaction. You did mention a little of my 30 years in a half a second, but I'll probably start from that point of view about what 1776ing is. And I think Maggie has effectively taught me how to share these screens, so I will start sharing what 1776ing is about. So we are a fintech what used to be called SaaS, or software as a service, but more so now it's platform as a service. And so the technology we use enables our clients to operate and run their businesses. And essentially, we have come at this from a different point of view over time. As you mentioned, I graduated with an engineering degree from college, and I used it temporarily. However, I went into the military almost immediately after I graduated. So while I had lots of engineering experience and internships, when I joined the military, I didn't need much of those skills for at least the first couple of years. And I spent some time on active duty, and then I spent some time in the reserves. And when I left the military, I joined Merrill Lynch as a rookie broker in their PDP program at the time. And that's where I really started getting involved in investments for other people, as well as financing projects. Seeing how I was an engineer and a soldier, I had maybe a different mindset and point of view than most folks starting as a rookie broker or in the sales force. And so I gravitated more towards investment banking and business finance than I did to selling individual stocks and bonds to old ladies. At the time, that was kind of the business for Merrill Lynch. As I evolved there, I spent a decade at Merrill Lynch and earned my certified financial planner designation while I was there, and became a little bit more involved in their wealth management side, but also spent quite a bit of time on their business financial services, lending money to businesses, financing multifamily developments, financing franchises, doing lines of credit, as well as corporate retirement plans and corporate cash management for large public institutions. So there's a little bit of an oddball at Merrill Lynch in terms of where I spent my focus. I also had the opportunity to do some pipes at the time, where this is the late 90s, where private companies were raising money in a number of different ways. And I had a relationship with our global technology fund manager. And so through my relationship and the fund's ability to invest in private companies, as well as public companies, we leveraged some money and did some investment banking on the tail end of 99. Bad timing, for sure, but it was a great experience learning how the investment banking system and institutional money working and private equity work as well. So from that point on, I moved to UBS and transitioned from Merrill Lynch to UBS to really focus on wealth management. Unfortunately, at the time, I got to UBS. A year later, UBS failed. That was early in 2008. UBS failed right before Lehman, actually right after Bear Stearns, but before Lehman. And so I was a little concerned about this wealth management thing may not last. So I went back to my investment banking roots and started doing some work for some bankruptcy lawyer firms about what type of recovery they could get on different assets. And that led to really what has become my entrepreneurial endeavors ever since then. I've been involved in investment management, as well as private equity, as well as investing directly through venture capital and venture capital funds. And those experiences over time kind of led to what 1776, the tool set we built is. Originally, we built it for our own private equity company as we were raising money in the market over 5 years, and realized that raising money from accredited investors at scale is a very difficult thing to do. Raising money from friends and family also is very difficult to do. But as entrepreneurs are building their businesses and they seek capital, and there's many ways to get it, but in the what we call the Reg D space, which is a regulated exemption from an IPO, doing that requires following the SEC security rules, as well as finding the investors who are actually willing to hear your story and invest. So when we started raising money on our own, we did it compliantly, but we did it the old-fashioned way. We did a lot of lunches, a lot of dinners, a lot of one-on-one meetings, a lot of traveling the country on plane, meeting investors, and sharing with them a PPM one at a time, and discussing the investment one or two at a time. And I quickly realized that we simply would never scale our business if that's the way we did it. And frankly, that is the way majority of Reg D offerings are still done today. They're quite a bit bespoke. They're done without use of technology, a lot of emails, a lot of attachments to emails, occasionally some Zooms now or restreams like we're doing today. But while we're going through the process, I thought that we're never going to scale. We're never going to raise enough money and have the impact and have a fund that can do what we need to do. So we started leveraging some crowdfunding tools that were available online, but not for Reg CF deals, instead for Reg D deals. And so we used a platform called Fund America at first, and they had a button called Invest Now. And you can license that Invest Now button and stick it on your website. And when you had a prospective investor, you could give them access, let them log in, see what you're offering, and then go through this Invest Now process to subscribe. So that was the beginning of the long road, which eventually has become where we are today on 1776ing, was taking bits and pieces of existing technology and cobbling it together into a system that allowed a sponsor of private equity to go to market compliantly, message, communicate, and market to their investors. And when those investors are actually interested, to share them the details of the offering, compliantly, of course. And if they are still interested, to have them subscribe, pay, invest, and complete the process to become an investor in that fund or offering. And then post-offering, continue informing that investor about what they did with their money, how their investment is performing, and continuously communicate. And so that's really what 1776ing is today. And so this is one of my favorite quotes from Think and Grow Rich, one of another author I can talk to you about later, Heath. But I'll zoom in there for your audience who's interested on what we're talking about. But this was written in 1955. It really hasn't changed today. But groups of people put together with a good idea can do great things. And that's really what the community of 1776ing is about, is enabling more capitalism to be expanded to more investors in maybe a much more simplistic and frictionless way. A couple things on here, and you can of course let me know if there's any questions from the audience. Okay. So what we do essentially, without logging in and showing you any secret sauce, is let me share a different screen here. We'll share a new tab. Okay, so we offer a number of things to our issuers, and I guess I'll just go on from our point of view of how we run our business versus some of the other folks in the market. When we started licensing 1776ing, which was really only in 2020, to folks other than our own private equity company, we'd had a point of view that we were in the business raising money for 5 years, and quickly realized, like I had mentioned earlier, that we simply couldn't scale without leveraging some software platform to do some tasks. And as we were building our business and building this platform to license, we come at it from the point of view of a private equity sponsor. And that's quite a bit different than some of our competitors' point of view, which gives us a little bit different look and feel of how we operate our software. So most importantly, we have a multimedia offering portal. And what that means is, just like we're doing today, video is so impactful. It's so much easier to tell your story on a video, or at least get your investors or potential investors to understand who you are and what you're planning on doing through a video, than going through a 30 or 40 page PowerPoint, or reading through a 20-page document, or even an attachment on an email. Video is so impactful. So all of our portals have the option to do multimedia from the very start. Not everybody does it because it can be a little bit different or uncomfortable for some sponsors, but it really is a way to get your message. And then also too, on the 1776ing portal, our client is the entrepreneur or the issuer. So when someone comes to us and licenses our software, they have a brand, they have a business, they have people, they spend an enormous amount of money crisscrossing the country, like you talked about, trade shows and events, talking about their company, why their company is different than the other companies, and how their offering is different. And my partner Chuck and I joke, if you walk into a trade show, and we'll be at TNDDA tomorrow, or in Saturday, or DISA or something like that. We joke in a nice way, of course, for the issuers who are on the call. It really is a sea of sameness. And people look the same. Multifamily from one sponsor to another looks the same. DSTs look very similar. It's difficult for a broker or an advisor to understand the difference between firms, much less an investor. So on our platforms, we desperately tried hard to ensure that the brand of our client, of our issuer, is kept and reinforced. So rather than sending your clients to some third-party website or some third-party service, when our clients are raising capital, they direct their advisors and their potential clients to their own portal with their own brand. We have data rooms integrated. That's 5 years ago that was something hard. Today it's fairly easy. And I know some of your people who may be watching may go one place for one thing and another website for another thing, and go to Dropbox for something else, and Teams Drive and for something else. Keeping it all in one place on one portal makes it a lot easier and quicker for people to do their due diligence and understand what your offering is. Of course, we're 506B compliant, which is fairly easy, and we're 506C enabled. 506C is probably one of our real strong points on the platform, and I'll go through that a little bit more into detail. It's not widely adopted for sure, especially in the community that uses in the independent broker-dealer community, but it's becoming a wider acceptance. There are some difficulties to making sure you compliantly conduct the know your client and the accredited status. And we built some automated procedures into our software. They're not foolproof, but they do help that offering go quite a bit faster. And then most importantly, we're RIA and registered rep inclusive. So on our platform, the advisor leads the investment. The advisor actually signs in and subscribes their investor on our platform. The investor does engage with our platform to read and review and understand their investment and to sign, but it's very advisor-led. And that really comes from my experience as an investment advisor at Merrill Lynch and UBS. I firmly believe that alternative investments, however you define them, and particularly private equity in these funds, really should be driven and led by the advisor. Even accredited investors and wealthy clients, they simply don't understand the complexity of these type of investments. And I do strongly advocate that investors, whether they can buy these direct or not, continue to work with an advisor to do it. And I won't bore you guys too much longer this one, because I did say I'd be less boring. We call it the investor and custodian portal. So once the investor has subscribed, invested on our portal, if our issuer likes, they can use our portal to provide some a login and investor access post offering, so those investors have one place to go again to see what they bought, how they bought it, and what's going on with it in particular. For our broker dealers, we do KYC and AML. We do it in line with the subscription, and we do it through digital tools. So it happens real time as an investor or an advisor is filling out a subscription. You don't have to wait for it or check it. It eliminates NIGOs to the most part, unless a client or an advisor tries to spoof us. But there's really no way on our tool to end up with a NIGO when the subscription is completed. We're integrated broker dealers. Not every broker dealer is adept at leveraging technology, and that's been part of the learning curve with 1776ing. There are some who are have their written policies and procedures, and they've had those same policies for a number of years and continue to do very well by doing it that way. But many broker dealers now are integrating some technology, at least, even as something as simple as smart sheets, to start automating, digitizing the way they manage and control data. We're far, far beyond Excel spreadsheets, and one of the I guess pivots we had early at 1776ing is we frankly overbuilt our software. We have so many features and tools, and it was so automated and so quick. We bypassed a lot of the minutia that broker dealers really actually like to do. We automated it in certain pieces they simply didn't want automated. So we backed off a little bit. Like any business, we meet our clients where they are, and then we try to take them into the future with us. And there's some more things on the investor relations piece as well. The preponderance of clients use a third-party fund administrator, which helps with accounting as well as other features. But for smaller Reg D deals and smaller sponsors that aren't going to have thousands of investors, they can get some of their fund administration done right on our portal. So I talked a little bit about the point of view of how we develop the software. So I was in the business of raising money for a number of years. I thoroughly enjoyed it. We had a lot of success, but there was a point in time where I realized that the software I had built to run my private equity company was a better use of my time and actually performed better than what we were able to do on our private equity projects. And the second point of view we have here particularly is I do still run an RIA firm, and it takes up an enormous amount of our time for our clients, which is wonderful. But I have the point of view of how does an RIA interact with alternatives, and how do we invest our clients into these types of investments? Again, like I mentioned before, the being in the market and investing other people's money for almost 30 years, it is no small task to take clients' assets and put them into an illiquid 5 to 10-year hold private equity offering that is at best opaque, if even close to the point of clear, with a complicated waterfall, a difficult to communicate to clients how the preferred returns work over time, much less understand what that entrepreneur or group of entrepreneurs is going to do with that money. So when we built our 1776 platform, we realized that, again, these really should be advisor-led. So as we're built our tools and our processes, the advisor is kind of the point person and really the leader of the investment on our platform. And although we do offer and have a number of clients who do have direct LPs, they're usually going direct from the entity or the private equity fund directly to LPs who they're already engaged with and are using our system to communicate with those LPs who they already have. Let me pause here for a minute. I don't see any messages from the audience, so maybe it's the hurricane. So I don't want to keep babbling on. Keith, do you have anything you want to ask?
Hey, yeah, it will actually see those on our side. So those are going to come up. Those will come up in a moment. So they'll come up in a minute. So that's where you're going to see them, because we didn't want the questions to interrupt your flow.
Sure.
And I have a couple of questions that I wrote out, and then I know you and I spoke and communicated before in the last couple of weeks. If you were to give just a summary, and you already have in a way, but a summary of how is your platform different from the competitors that we're both familiar with? And we're going to have many of these competitors online with us in the next few weeks. We know them very well. You know them very well. But what is if you were to put it in like a nutshell, what's the summary of how you're different from your competitors?
Sure. Thank you. And thanks for asking, so I didn't have to bring it up myself. I can tell you for sure that the client of 1776ing is the issuer. So when we get hired and people use our platform, it's that sponsor who is raising money who is our client, and our business is making their offering successful. So in terms of the competition landscape, if you go to the very high end, which I admire iCapital and their ability to raise money and deploy it into technology. I mean, they are an administrative tool of the wirehouses. It started with Bank of America, Morgan Stanley, and JP Morgan, and BlackRock. They outsourced their private equity administration as a way to deliver the funds that they had on the platform to that broker-dealer network. They've done a great job, and it's awesome technology. But it's really driven by broker-dealers selling internal products of their firm. And then some of the more bespoke firms have built the technology tools to really serve their managing broker-dealer. So as the managing broker-dealer was trying to onboard more investors and make their business more efficient, they built software to enable subscriptions primarily to be done online or be done, which I think some of them call STP or straight-through processing. So those are also good applications of technology. If in fairness, for those competitors who do that, if that's all the issuer needs is a subscription agreement filled out, they are great, cheap, and expensive tools to get that done if they can't do it themselves. When we went to market, again, we went with the market at the point of view as an issuer in a private equity company raising money. We spend an enormous amount of money keeping our brand, getting our message out. And when we direct advisors and investors to our offering, we want them to see our offering. We don't want to see them the offerings from all of our competitors, or go onto a marketplace and be ready to place a ticket or we place an order and then get distracted or dissuaded by all the other offerings on that same marketplace that might be different or better or more snazzy or have a different offering. So we don't have a marketplace. 1776 does not offer a website where people can go and look at all the things that we have and all the sponsors that are using us. And I don't suspect that we ever will as a broader market like that. That's just not the way we're going to market. We do build private marketplaces for RIA firms who do curate a list or a summary of some different alternative sponsors that they want their own Salesforce to see. So we do run portals where an RIA can log into their portal and say, okay, well, here's 3 private equity offerings that are appropriate, my firm deems appropriate, or they've done due diligence on, that they're going to let us offer. And then I think the last thing in terms of our competition, we're not a management broker dealer. So we do charge for our services. We're not giving away the software to get the MBD business. And that could go against us or go for us sometimes. But when we work with our client, we're working with their MBD or whatever MBD they choose to use with our platform, as well as their back office service, as well as whatever fund administrator they choose and whatever transfer agent they choose. All of our software is driven on APIs, which just is called an automatic programming interface. So one piece of software talks to the other piece of software, and we can drive data out of our portal into your Salesforce.com. We can drive data into SS&C. We can drive data into an FTP upload for these third-party transfers. And as you know, in NewView, we can drive our data into NewView's system. So NewView can get an output of an investor subscription that you can directly upload into your own systems.
That's a good point too. Does your system platform integrate at all to provide information to DST, Black Diamond, or would that ultimately be through to us and then we would communicate to those particular platforms?
Yeah, it's a great question. So we can do it really 3 ways. We can push directly to Black Diamond, Orion through our system, through our subscription piece. We can push it data into things like eMoney and these third-party aggregators that then push it back down, or we can push it right into DTCC. So however it's set up, they're all just kind of token technology-driven transfers. Because we are totally API-driven, we can API almost into anything. So we push data into HubSpot, we push data into Salesforce, we push data just about everywhere right now. And that gets a little tricky because you got to make sure that you're not pushing bad data into somebody else's database. So I know there's a big call for this, we'll call straight-through processing and integration of data. There's a lot of reluctance in the community to do it from one database to another without some type of intervention or quality assurance in between those two. Because if I take on a subscription and I pass my data into your system, for instance, and let's say we push one field to the wrong place, that'll script your database. And so for a while, and maybe for a long time, I don't think the industry is going to really ever get a full STP solution, because each of us have our own responsibility to protect our own data and make sure that the data and the way we interact with our own business is not only accurate but secure. So I won't call it a myth that there's going to be a straight through processing. Everything can be done in one portal in one way. There's a lot of good reasons why that shouldn't happen right away.
Yeah.
The other thing too, I think in terms of competition and our point of view, and this goes back to me being an RIA and investing other people's money for almost 30 years now. While I think it should be easy to subscribe to an alternative investment, I think we have to be careful making it too easy, because our software can, in a matter of minutes, sign somebody up for an offering that is illiquid for a matter of years. And so while we can simplify the onboarding and the process and take out the minutia and the mundane tasks of software, the advisor, I think, still has to be highly involved with their clients, saying, although I can make this really easy for you to subscribe, you need to know that when you do subscribe, there's really no way for you to get your money out of these things. And so we're cautious on our platform of who we take on and what we believe the money is going to eventually go to once those investors deploy it.
So it's not all about access. It's also about a degree of due diligence and compliance work, if you will, that you're doing on the back end first.
Absolutely. And as you know, there's a lot of great third parties in our system, like FactRight and MIC and Sterling and Mercado, and lots of great third party due diligence providers that offer a tremendous resource to the advisor as well as the client if they're available to the client. So they can get a deeper dive into the sponsor and who's raising the money, as well as the product that they're raising the money in. And again, we're cautious about who we license our software to. We've turned down a number of opportunities to sell our software to people who are going to raise money, just because we weren't comfortable with how the money was going to be raised and how it was going to be deployed. So it's not to say that we vet and due diligence all the people on our platform. We don't take the responsibility for that, but we do limit who we offer our platform to.
And also, I'd like a little clarity too, because maybe some of our audience may feel the same way. You're managing broker dealer. Okay. However, does that mean still a broker dealer, let's say an independent broker dealer, can still work with you and hire you and work with your platform in terms of some functionality you have to make their investment into alternatives easier?
Exactly right. So the MB, we are not a managing broker dealer. So if I misspoke, make sure we do not own and operate a managing broker dealer like some of the folks that will follow us. We're kind of agnostic in terms of that. Our software can work with any managing broker dealer, provided they're willing to adopt some technologically enabled subscription process, KYC, and some AML. So we work with virtually a number of broker dealers already, and what we call the managing broker dealer who's in charge of the deal. I mean, they really have the responsibility for the KYC and the AML and the guidance information as well to make sure that clients are suitable. But then the syndicated broker dealers also use our software in the same way. So once you log in or we create a portal or an offering for a deal, all the broker dealers from all through the syndicate log into that portal, subscribe in that portal, and the data all gets passed to whomever needs it. So the MBD has a kind of admin access. They can see what's going on. And then the syndicate broker dealers can also have a limited admin access to see what's going on with their broker dealers as well.
So you can tailor your platform, whether it's directly to an independent broker dealer or generally speaking, a broker dealer, an issuer, a syndicator, and ultimately the investor too. So it can be tailored to basically adapt to whatever those particular needs are for each of those parties, it sounds like.
Yeah, that's exactly right. And I'll just show you briefly. I can show you a 506C offering on here because it is this one in particular is an entrepreneur raising a few bucks on a smaller deal. But when we run a portal like this and someone runs their own website, then they'll launch into a tab. I think you guys are seeing this. Hold on, let me share a different tab. Stop sharing that one. And when people sign up is really how we differentiate the access to our platform. So depending on how you sign into a portal that we're offering, if you're an RIA, there's certain things we require of RIAs to be able to access the platform. Most notably, we need to check and know what your CRD number is and then your firm CRD number. And the same thing for a registered rep. They can log into our portal, but they also have to give us their CRD number and their firm CRD number. Investors who log in, normally they will have to tell us that they're accredited, and they'll have to tell us how they're accredited before they're allowed to see the offering. Even on 506Cs, where you can generally solicit, there's no point showing it if you can't have an investor that can actually subscribe. And then we have some third-party access as well for different reasons. And then the supervisor access is really the OSJ or the manager or the CIO of the firm. They have access to see all of the broker dealers or RIAs who are investing in this portal as well through their own entitlements. So each access point creates a different set of rules on the software once you're logged in. If you're logged in as a RIA, you get different tools and different access. And then once you log into a portal, I can log in here as an RIA quickly. At that point, you actually get to see the offering and what the offering material is about. And so if you're logged in as an advisor, you'll be entitled to see certain things like the due diligence on the offering. If you're logged in as an investor, that financial professional use only material won't be available to you. So again, depending on the access we give you based on your role in the investment, on the same portal, you will see a variety of different views and a variety of different pages. I'll log out of that quick.
That's great.
And I think that's quite a bit unique in terms of the folks who are on the market today. And it looks a little bit like a case or an iCapital, but again, when we license our software, we're licensing it to an issuer who really are competently and deliberately trying to keep their brand and their brand awareness in front of the group.
Versus again, a marketplace where they're flooded and access is good, but it's also dilutive. Yours is more targeted and again, more tailored.
Yeah, I can't even. I mean, I can't even tell you if I had a nickel how much rich I'd be. How many times, even myself, you go into when I was working at UBS or something, you go into these portals and you say, "Well, I was planning on investing in this fund, and I got there, and now I realized that that wasn't really the best fund. Look at all these other funds that were available." And you can either get confused, or you can split the ticket, or you can not do it at all, or you can go through and what you intended on doing anyway. And so, as a again, as from the issuer's point of view, they're entertaining, they're educating, they're spending an enormous amount of money and effort attracting their attention for the community that they're attracting it to. And then if they don't have their own portal and they go send them a capital or they send them the case, they might as well have sent them to their competition, because that's exactly what they're going to see when they get there.
I'm getting a couple questions. So it looks like there's somebody from the audience that or viewership that would like. So I've seen some of your 506c material and social media. How does 177016 run those type of offerings? You referenced it a few minutes ago, but if you'd like to speak on that a little bit more.
Sure. So 506c is a great way to get your message out as an issuer. It's the exemption from the IPO, similar to a 506b. But a 506b is like a big secret. You really can't tell anybody about it. You're supposed to have a pre-existing substantive business relationship with anybody who sees your message, which is difficult to scale. On a 506c, you can, through social media, websites, advertisements, emails, magazine ads, you can generally solicit a private placement offering. And the difference is, on a 506c offering, each investor that invests, either the issuer has to show that they validated that that investor is in fact an accredited investor, or they can rely on certain third parties to do that for them. And so it's not exactly easy, but it can be done. Some of it can be automated. There's third party services like us that do that in line with the subscription. And then many issuers still do that themselves. It becomes a little bit laborious because they have to collect documentation and such. But there are ways to rely on third parties like the client's RIA, or like the client's advisor, like the client's CPA, or like the investor's attorney. We automate that on our platform. But I really think the market will go there quickly, and the issuers who are actually trying to scale and raise money are kind of foolish to still be doing the 506b type offerings, because it really is a big secret.
Sure. I have another one, and we're 139 now. We want to stay true to our 145 hard stop for our viewers and our speaker. I would like to throw in another one I just received here, and you and I are both geared toward the alternative space, if you will. Now, I spent 20 years as a wholesaler in the 40 Act space. I'm excited to be in this part, representing NewView, but also, again, you and I see each other quite often at the conferences. I feel like we're in an expanding marketplace. And what do you think? And I think we can all share ideas of why, but why do you think there's such a drive and expansion in the alternative space today versus 5-10 years ago?
Oh yeah, I mean, there's so many great reasons. One, it can be bespoke, and I think in the publicly traded market, and speaking as an RIA as well, your ability to influence the portfolio's rate of return has become less and less. There's less public equities available. They keep shrinking as private equity keeps buying these companies, and then you're relying on an economic cycle in order for you to make your client his rate of return. When you move to the alternative space, which is probably not a great name, but private equity and alternatives to the public market, now you can make your profit, or your profit can be derived by the entrepreneurial actions of the investment that you're putting your money in. So you can buy into a multifamily ground up development and go through the entitlement process as an investor with a sponsor, where they change the value of the land just through the use of the entitlements, where they build a structure, where they invest in the structure, and when they start creating a business. So in my RIA in particular, the preponderance of wealth that gets created in America is created by small businesses or entrepreneurs or executives working for companies that have stock. In the public markets, that's already happened. That wealth has mostly been created. Those companies have IPO'd. I think it's a great place to put the bulk of your money. You get liquidity, you get clarity, you get SEC oversight. But when you want to concentrate your wealth and accumulate it, investing in businesses or entrepreneurial endeavors can provide you far greater rates of return. And I think that's what investors are seeking when they go to the alternative investment space. is something other than economic cycle driven investments like the stock market and the fixed income market, but something where someone, a group or a fund or a company can, go to work and create value through their intellect and through the capital that gets put into that project. And I think tools like us and folks who are in our space, by enabling understanding and access to these type of funds, or just have really a tidal wave of opportunity coming our way, because we are enabling these investors to get into these investments with a deep understanding of what they're doing with their money, to subscribe, and then to understand where their investment is. As much as we're talking about onboarding, and I know this series is about getting into these alternative investments, I'll tease you with this, Heath. This is just the beginning. The second step is, how do you get out of them? How do you create liquidity on a private investment that should normally be a 10-year hold? Or how do you access liquidity when you are invested in a great PE fund that you're going to hold for 7 or 8 years, and you don't want to exit it, but you'd like to access some of that value? Our platform is already built for that. That's one of the engineering features that we probably overbuilt when we went to market, and we took a step back. But getting in is only one part of the equation. Getting out is the second part of the equation. This industry right now is focused on enabling the automation to get in. And I guess once we nail that, we will pivot to the ability to let people get out, or at least have some liquidity while they're staying in.
And ultimately, that's what our broker dealers, our financial advisors, our independent broker dealer advisors, that is what they're thinking about, right? As far as maintaining their books of businesses, the practices, making sure that they're doing the right thing, either as a direct or a fiduciary. I'm so glad that you brought that up, because that's so important. And then back to what we were talking before, as far as the question of why we're seeing this market expand. We also have such an environment now, right, with inflation, rising interest rates, where investors are looking for, and financial advisors are looking for, an alternative to bonds, as an example. What is that hedge? What's that non-correlated position that's going to help in our overall portfolio? And I think and for us at NewView, our specialty is to provide a platform in which investors can use their traditional IRA assets, their Roth assets, to participate in this ever expanding market. And then you are tailoring the experience ultimately for the investor, directly partnering with broker dealers, issuers, and investors. And that's why that's why we communicate so often with you, right? As we incorporate our two platforms together, ultimately making it easier for broker dealers, issuers, and investors to feel more comfortable and confident in entering. And I'm so glad you brought it up, and also potentially to exit. We are now at 1:44. We have one minute left. Is there anything in closing remarks? We are going to follow up with an email on behalf of Sean and our listeners and our viewers with information of how you can contact 1776 Inc. and Sean and his team. You can also refer to this particular recording as a reference for later on, either through the landing page, the YouTube, or LinkedIn. And also, again, as I mentioned on the front, it'll be on our website eventually, which will be part of our educational portal. And thank you to all the listeners. Thank you, Sean. Is there any last comment that you'd like to leave us with?
Yeah, well, I thank you very much for having me on to launch this program for you. I was delighted to be honored and delighted to be allowed to talk amongst some of the other great participants that you're going to have here. Now, I'll just leave you with what 1776 thing is about. It's taking action to create one's own wealth and prosperity. That's what our business is about. So while we do process subscriptions, and as part of the feature, the platform is really the ability for entrepreneurs, issuers, and sponsors to raise money from capitalists and investors, deploy it, make a profit, and then return it back to those investors.
Awesome. Thanks so much, Sean. You're always a gentleman. Really appreciate it. And thank you all the listeners. And as a reminder, we have four more webinars over through the course of November, December. We'll send you an email as a reminder. And thank you so much for your commitment to us. Thank you.
My pleasure. Thanks, Shal.